A very good evening, everyone. My name is Imran from Kenanga Futures in Berhad. For your information, today's session is a joint collaboration with Chicago Mercantile Exchange Group. This webinar is to create awareness and provide education on listed derivatives to the participants. Please take note that futures and option trading involves substantial risk due to the leverage factors and may not be suitable for all investors. This webinar is purely for educational purposes. Kenanga Futures in Berhad accept no liability whatsoever for any direct or consequential loss arising from any use of the content of this webinar. Today we have a fortunate to have a speaker to join us for this session. Without further ado, let me introduce Jose Blasco. Jose Blasco is a multi-asset trader who specializes in options, equities, futures, and currencies. Since he began trading in 2008, he has accumulated a wealth of knowledge on global markets, trading both directional and non-directional strategy across multiple timeframes. As the founder of Traddictiv Private Limited, he specializes in creating cutting-edge trading technologies that leverage machine learning and AI, significantly enhancing strategic market analysis and decision-making processes. If you have any questions, please feel free to drop in the chat or use the Q&A section. Over to you, Jose. Thank you very much.
Thank you very much, and a real pleasure to be here. I am about to share my screen. As I am doing this, I would like to confirm that sound is good and also video. Just a quick confirmation to make sure all is good.
All is good, Jose. I can see the screen right now.
This is fantastic.
Thanks.
Thank you again, and again, hello to everyone. It's as I was saying, a real pleasure to be here. I'm very excited, both to be here to talk about trading, which I think we all love and enjoy. Probably we're all passionate of it, isn't it? But also I'm very excited because today we are talking about a new product, which is tradable in the CME exchange, which is the possibility to be exposed to cryptocurrencies, in this case, Bitcoin and Ether, in a micro format and in an exchange traded derivative type of product, which is fantastically well regulated and therefore very safe to trade compared to being exposed to the cryptocurrencies in a non-regulated on-chain environment. So it's very exciting for me to be here, and again I thank you all for also joining us. Here we go. So let's begin. So what's the plan for today? Well, we have an agenda here. So first of all, introductions. Well, I've already been introduced, so I'll skip that one, which is great. We'll talk about futures. Okay, I'll have a few questions to begin with, actually. So be ready to use your phone to scan a QR code that we'll share on the screen in a moment. That will allow us to have some answers on the screen in a way that is anonymous. So it'll be great for me to know a bit more about you, so I can customize this webinar. Maybe I don't need to spend too much time on Futures 101. Maybe actually you need to know more about futures. So I'd love to get some answers to the questions that are coming. So be ready with your phone. So we'll talk about micro futures, which is a special type of futures, and we'll talk about crypto futures, which can be micro too. And therefore it's going to be a lot of discovery of products that you may have heard about. Well, today we'll dive deeper into it, and you will be able to evaluate not only the benefits, as it says on the screen, but also the risks, and also how do they fit in your portfolio. How can you trade them? How active can you be? What can you do with those products? So we'll talk about use cases and so on. From there, we'll move into a market outlook. Now, instead of doing a classical technical analysis, classical market analyst type of outlook, I am a tech guy, so for me it's all about technology and data and a scientific approach to the markets, and therefore I'm going to use machine learning. I'm going to use an AI-driven way to look at the markets and examine and predict what is likely going to happen to Bitcoin and Ether in 1 week time, what about in 1 month time, what about in 1 quarter time, what about in 1 year time, because I assume that all of you attending this webinar today, or maybe you're watching this recorded, you may actually have different styles. Some of you may be fast-paced intraday traders, some of you may be long-term investors, some of you may be anywhere in between. So I'd like to give answers to everyone, and actually it's not going to be me giving the answers, it's going to be the technology I've built, meaning the AI, the machine learning, giving us the answers by using data. Okay, so beyond an opinion, a biased opinion, a preference, so we'll rely on data. Okay, again, scientific approach. Then probably the most important part is going to be turning it all into action. So we'll examine a few trades, some for educational purposes, which are screenshots that I have taken and prepared for today that are on the slides. But most interestingly, also for education purposes, but most interestingly, also using real-time charts. Okay, so you will see me use real-time charts today beyond the slide deck, which of course I will use as well to support the theory of what I am about to explain. But most importantly, later on, I'll move into real-time markets, which is what we all want, isn't it? Also, I'll provide a few resources for you to enjoy after this webinar is over, and food for thought and so on. So I am positive you'll appreciate it. And then before we conclude the day, we'll have some questions and answers. We haven't started yet, but in case you haven't noticed, I tend to speak fast. I am very excitable. I love the markets big time. And sometimes I get excited. So if there is any moment in time in the webinar that you have questions, please type them in the chat box, because I'll be looking and I'll be answering either on the fly or at the end. Make sure you type so you don't forget. If I go too fast and you don't have questions, but I'm just going too fast, just let me know in the chat box. It's fine. I will take it very positively, okay? I'm here for you. So you let me know if you need me to repeat something. Happy to do it while I'll try to moderate my pace, okay? So let's do a little bit of teamwork, okay? So anyway, so let's begin with the questions I talked about. So I just mentioned the term teamwork, so let's do it. Everyone, please go ahead and scan the QR code on the screen with your phone. That will bring you to a place where in a moment I will turn on 2 questions, and you'll be able to answer using your phone. And again, it's going to be anonymous. But the beauty is that we are going to get the answers on the screen. And that I believe will be very interesting for all of you. For me too, of course, because then I get to understand better what you guys need. So I can customize these webinars, I was saying. But again, it will, I believe, also very interesting for you to see. Okay, those are going to be very interesting questions you'll see. Okay, so I see 6 of you have already scanned the QR code. We are more than 6. Okay, so I would assume that you guys are still scanning. I'll give you a few more moments, but it will be so amazing if I could count on a bit more participation from you guys. Again, my intention is that this webinar counts, okay? And the more I know about you, the better I can help. Thanks a lot. Thanks a lot. Very good. So let's begin. Okay, so question number 1. Okay, so very, very simple question number 1. So we're gonna have 1 minute, 2 minutes actually to answer. And the question is, are you new to trading crypto? No matter if it's crypto futures or crypto on-chain or crypto ETFs or crypto CFDs or crypto, you name it. Are you new to trading crypto, and which currencies have you traded before, if so? Okay, and if you're new, you just type yes or new. It's fine. Thank you so much. And you can see how the answers are now popping up on the screen. Here we go. So it seems that so far, most of you are new. No Bitcoin and altcoins, no Bitcoin and Ethereum. Okay. Bitcoin, yes. Very good. Very good. No Polygon and Bitcoin. Okay, got you. Very good. Yeah, so far we've got 9 answers, and now is answer number 10. Thank you so much. You guys are amazing. And also we have Ethereum. Very good. So we have a little bit of a diverse crowd, which I was kind of expecting, but this is great for me to see. So I can really focus on what you need. I can see in the very big, in the center of the screen, in bigger fonts, yes, and new. So it seems that most of you are new. So no worries. If cryptocurrencies is something new to you, no worries, because I will be explaining it. Okay, and we'll kill 2 birds in 1 stone. We'll learn about futures, but also we'll have a crash course on crypto if that's what helps you the most. Okay, so no worries about that. And yeah, and everybody's gonna be okay by the end of the webinar. You'll see. Okay, so wonderful. Thank you. Now, question number 2. Okay, let's go for question number 2. This is again another 2 minutes. And the question here is, which crypto risks worry you the most? Which benefit do you see in trading crypto on a future exchange? Okay, so many of you are new, but somehow you are here. You are new to crypto, but somehow you are here in this webinar, which is about crypto, which means that you may have some interest, but also you may have some fears. So I'd like to know more about your mindset. What are you thinking? Which are the risks that worry you the most? And which are the benefits that you envision trading crypto in a futures exchange may bring to you? So I'd love to know more about those thoughts, those worries, those concerns, those exciting thoughts as well, both sides. So then I can give you examples of all of it. Okay. So very volatile and high leverage. Very good. Very volatile as well. Very good. Give you a little bit of time to type. So far, we got 2 answers. The volatility. Here we go. It seems that you guys are very much in sync, isn't it? Volatility. The value, the certain value. Data lost or key lost. Very good point. Very good point. Yep. I also see Sinapan, you are answering on the chat box. Okay. You are new and you're also worried about volatile. Very good. Thanks for typing on the chat box as well. This is great. Unforeseen operation, the case of FTX, which has one of the greatest scandals and scams ever, isn't it? Like 3 times the size of the Madoff scandal, years ago in New York. Very good, fantastic. Thank you, everybody. This helps me so much to understand where you're at, you made very, very good points. We're gonna discuss it all. Very quick here. I would like to mention that many of you mentioned volatility. These, by the way, depending on your mindset and your trading style, some traders see volatility as a very good thing because you make money faster. Some traders may see volatility as more dangerous because you may get stopped out too fast. And both are right, because there are pros and cons of both. Okay, so I understand the concern. I understand also the excitement about it. I understand both. So we'll talk about it. I'll give you examples. Someone said about losing the key, okay, data lost or key lost. Okay, well, the beauty here is that we're going to be talking about crypto traded in a futures exchange. So there is no key. Okay, the key in this case is called Kenanga. It's going to be your broker, which is giving you safe access to the Chicago Mercantile Exchange, which is the largest futures exchange in the world, located in Chicago. And benefits from the greatest regulation ever, and is also recognized by Securities Commission in Malaysia. So absolutely regulated and very, very safe environment, and you are getting in and out of that environment through Kenanga, which is obviously also a company which is properly licensed and regulated in Malaysia. Okay, so we are not owning the crypto on the chain, and therefore there is need for cryptography keys, and you can lose them or they can be stolen from you, and you have all those crazy situations like crypto wallets problems and FTX scandals, as you said. So today we are talking about being exposed to crypto, benefiting from the pros that crypto brings in, which we're going to discuss today, but doing it in a way that is very pragmatic, very simple, like you would trade palm oil futures in Bursa Malaysia, but instead it's crypto futures or Ether futures, and it's not Bursa Malaysia, it's the CME. But it's going to be just that simple and that safe. Okay, that's the big difference. Okay, in any case, I will explain that with great detail as we go through the presentation. But again, I want to say thank you so much for this participation, and please keep interacting with me on the chat box. Anytime you have a question, feel free to type. I may have questions for you. So if I ask you a question, be ready to answer to me as well in the chat box, okay? So we can have this teamwork I was mentioning about. Anyway, so Futures 101, I'm going to keep it very short here, but I do want to briefly explain what is futures trading, because we are talking about Bitcoin and Ether today, but we are not talking about Bitcoin on the blockchain or Ether on the blockchain. We are talking about Bitcoin futures contracts that you can buy or sell, and Ether futures contracts that you could buy or sell. So what are futures contracts, which is something that I believe many of you may know. But given the answers we just got, I also kind of feel that maybe some of you may have not traded futures before. Maybe you know what it is, but you have not traded, or maybe you don't know what it is. So I would like to explain it very quickly. And I'm going to be a bit formal first, and then I'll give you some pragmatic explanation that will clarify it all. So a futures contract is a standardized legal agreement to buy or sell an asset at a future date and price. Okay, so this is me being formal, and probably this is me being confusing. Okay, this doesn't mean that for you to trade crypto on the CME, you need to hire a lawyer to craft a legal agreement. Okay, it's absolutely not the case. You trade Bitcoin futures or Ether futures using the electronic trading platform that Kenanga provides you, and you click the button on your phone or on your computer, buy or sell, in and out. That's it. Okay. Now, when you buy or sell, let's say stocks, which is typically an asset that people understand very easily because it's very intuitive. When you buy or sell stocks, you buy shares. And the moment you buy those shares, you own them now in the present. Whereas when you buy futures, could be palm oil futures in Bursa Malaysia, it could be FKLI in Bursa Malaysia, it could be the S&P 500 in the US, or it could be Bitcoin futures. When you buy a futures contract, you are exposed to that market immediately. So you are exposed to make money or lose money now. Okay? But you are not acquiring ownership. The ownership of the thing will take place in a future date if you choose to. You don't have to. So you can buy the futures contract. If the market moves up, you sell it, you made a profit, and you never had to own anything. Now, if you wanted physical delivery, let's say you were trading crude oil futures, and let's say you are Malaysian Airlines, and you wanted physical delivery of oil, so then you can buy the futures contract and wait until the future date, and then you get delivery of real crude oil futures. That now becomes real crude oil in barrels, okay? This is probably not the intention of anyone in this webinar to get physical delivery of anything. Our intention here is to be exposed to a market safely and make money on the way up, or make money on the way down by shorting, and be exposed to that asset safely. And sometimes as traders will be right, sometimes as traders will be wrong, but we're just gonna expose ourselves to the market to potentially make a profit safely. So we don't want to go, or it's not efficient, I should say, it is not efficient to go through ownership. While this is the traditional thinking of a non-educated trader, a more educated trader that knows about futures and derivatives knows you can profit from things without owning them. That's why futures were created. And if you think about the advantage I'm trying to represent, which I have not explained clearly yet, is that the fact that you avoid the ownership allows you to be in trades for very little money because you don't have to own it. So you just pay a little amount that allows you to be in the trade. You are exposed to an asset which is worth much more, so you profit faster because the asset is worth much more than the money you put on the table, right? But you don't have to come up with the whole amount to own it because you don't have to own it. So sorry for the long explanation. Let me keep going so I give you more examples, because first I wanted to give you, we all think and learn differently. So first I wanted to give you the kind of like the long explanation for the ones of you that are thinkers and you like to think about certain details. So I gave you kind of a long explanation. Now let me be a bit more pragmatic and give you another way to think of futures, and you will understand that I would think much better. So now the futures are traded on regulated exchanges, could be Bursa Malaysia, could be the Nasdaq exchange. In this case, we're talking about CME, which stands for Chicago Mercantile Exchange, which is the largest exchange in the planet. Okay, like the New York Stock Exchange, which is the largest stock exchange that everybody knows about because it's New York, it's Wall Street. It's 3 times smaller than the CME. Okay, this is just to give you an order of magnitude. So again, trading Bitcoin futures or Ether futures in the CME is obviously a good place where to be. So futures can be used for speculation, which means you want to make money up or down, hedging, which means maybe you actually own Bitcoin on the chain. But look, if Bitcoin goes down, you get hurt. And you cannot short Bitcoin on the chain. You can only buy or sell to close the trade. You can just get rid of it, but you cannot short it, which means position yourself to make money on the way down. I'm assuming that the majority have heard the concept of shorting before. If you haven't, on the chat box, feel free to let me know that you don't know about shorting and you want me to explain it. I'm happy to do that. And if you'd like to do this anonymously, you can always select my name on the chat box. So you send it directly to me or to Mohammed, and then we will not reveal your name and we will still explain what shorting is. Okay, so that you get your explanation. Or also portfolio diversification, right? You may own stocks, you may own, you may own gold or other assets. You have a multi-asset account with Kenanga futures. You can trade anything you like. Well, guess what? You want to be more diversified, and now you want to add Bitcoin or Ether. You can do it easily, right? So these are the reasons, okay? But let me give you a bit more of a pragmatic explanation of futures by discussing those three very important concepts: margin, leverage, and risk. So let me explain this. Let's go back in time to, let's say, the 70s. Okay, I'm gonna tell you a little story here, right? So way before the markets became electronic, let's say it was the 70s, maybe the 80s, and the way things would trade in Chicago or Kuala Lumpur or any other exchange in the planet is that people will need to show up in person inside the building of the exchange, come in, be licensed, and be allowed to come in. And now they would be on the floor of the exchange and they would be doing the trading. They would be, spending the whole day raising hands and shouting, buy, sell, and getting the trades done physically, right? So let's say it was that time, which is, by the way, when the futures were created. I mean, it's decades ago, many decades ago. And those futures markets, they were created first, for companies that were dealing with physical products. For example, in Malaysia, palm oil, or other products that derive from palm. In other countries, like in the US, for example, wheat, corn, and those commercial companies could be a food producer, and those producers of, in this case, the asset, for example, palm oil or rice. So they would show up in the exchange and they would agree on a deal, which is, okay, I will harvest corn in 3 months' time. So let's lock in a price today, and I will deliver corn to you 3 months later. And that's where the concept of futures contracts was born. So you would sign on a deal today to get delivery of corn 3 months later, which is the future, and that would be called a futures contract. The thing is that the price that you paid is today's price, where the delivery is going to be in the future, which even if the price of the asset went up in value, you still got the delivery because you got an agreement that you already paid for, right? So I guess that we can all see the benefit. But now, fast forward in time, and apart from food producers, many more futures contracts were created. For example, the S&P 500, for example, currency contracts, the euro contract, the Japanese yen contract. Many other contracts were traded in the futures exchanges, and now traders became more and more active, and electronic trading started as well, even in the floor. And then what happens is that every day you would go to trade on the floor and you would see Kenanga there, and you would become friends of your broker, right? And then your broker knows that every day you are there and you are taking those trades in and out, in and out, in and out every day, and that's what you do every day. So then your broker wanted to help you as a client, and then your broker would say, okay, you know what? Every time you trade, you have to come up with all this money to take the trades. What about this? What about you just deposit what we're going to call collateral money? You just deposit with me collateral money, and I let you trade at no cost. And at the end of the day, you just come to me and you show me the profits or the losses you have got. And if you have got profits, then congratulations. And you love me more now as your broker. And if you got losses, not a big deal. I'll take the losses from the collateral money you left with me, and I'll return the rest to you. meaning that you don't have to pay for the whole thing. You just need to deposit collateral money, which is being used to pay for possible losses. That's when the concept of margin was created. Futures trading is done on margin, which, if you recall what I said a moment ago, it means that when you trade Bitcoin futures in this case, or S&P futures, you don't need to pay for the whole sum that the contract is worth it. The value of the contract may be humongous, but you don't need to pay for it because you don't own it. You just come up with collateral money, which I'll talk about how much is margin. You will see it's very low values, to be honest. I'll have a table on the screen in a moment, and you'll see it. And basically, you just fulfill that requirement from Kenanga by following the requirement from the CME. And then, as long as you have this amount of money in your account, you are allowed to trade futures. Okay. And if you get a profit, congratulations. And if you get a loss, the losses are paid from the collateral money. But you never have to pay for the whole amount, which allows you to trade on leverage. Okay, allows you to trade on leverage. So thanks to trading on margin, another way to say margin is collateral money. You may want to remember it this way. One of the advantage of trading on margin is that you end up leveraged. So you make money faster. If you have a leverage of 10 to 1, it means a move of 1 pays you 10 times. So you made 10 times more. Okay, it's very powerful. Now, of course, this also comes with risk, because I just said you make money faster, but you also lose money faster. Okay, so we're gonna have to take about risk management, which no matter what we trade, we should always talk about risk management. It's all about risk management, and everybody should have that as a priority and stay safe. But of course, when we trade futures and leverage assets, even more, because you do make money faster, but you also lose money faster. Okay, now, having said that, I want to show you how this is not necessarily a problem as long as you are a disciplined trader. Okay, if you are not a disciplined trader, then if I could use a little bit of humor, I should say we need to talk. Okay, if you are not a disciplined trader. Okay, hopefully you find this seriously funny, meaning it's funny, but I'm being serious. Okay, but notice how this is not necessarily a problem. Why is that? Because look, let's say you are a trader and you decided that your entry is 10, whatever price that is, 10, whatever market that is, 10. And then you decided that you have a stop loss below price located at 9. So you have an entry at 10, a loss at 9, a stop loss at 9, which means that you're risking 1. Okay, so you risk -1. And then you set a target that maybe the target is located at, let's say, 13. So in other words, if you're right, your reward is going to be 3 plus 3, right? So this, which is probably well known by many of you, is what is called a reward to risk ratio relationship. And in this case is a 3 to 1. Every time I profit, I make 3. When I lose 1. And that is pretty worth it. You know, you take a risk of 1, and when you're right, you make 3. When you're wrong, you lose a third. So it's pretty okay. Now, the key here is that I have a stop loss in place. So if I'm wrong, I know I'm going to lose 1. Okay, if you were to not to use a stop loss, then we're in trouble. Okay, why are we in trouble? Well, because then you can lose unlimited, right? So that would be non-discipline, right? Anyway, so now when we trade on leverage, and let's say we are trading on a leverage of 10 to 1, so you have a multiplier of 10, okay, or 20 or 50, you know, in this case, let's call it 10. So when you use a multiplier of 10, your reward is not 30. Your reward is not 3, it's 30. And your risk is not 1, it's 10. Okay, now notice that even though we use a multiplier effect, which is your leverage, it still end up with 3 to 1, right? And 3 to 1, it's fantastic because if you take a trade and you lose 1 or 10. If you take a trade and you lose 1 or 10 or 100. If you lose a trade, you lose 1 or 10 or whatever amount. And then if you profit 3 or 30. So which means that if you were to be this trader, I mean, I'm not saying you would be very happy because you made 0, but you made 0 by being wrong 75% of the times, which is terrible. That was a very poor trading methodology. But even though you use that very poor trading methodology, because you are disciplined and you always manage your risk, so then you benefited from the 3-to-1, and that kept you safe, no matter if you use leverage or not. Okay, so hopefully this resonates strongly amongst everybody, because this is serious. We're talking about risk, okay, and it's risk management is it's everything. Okay, I cannot just emphasize it more. Okay, it's very, very important. So in futures, we use margin. Okay, the capital required to open or maintain a position, that collateral money, it's what we need to trade futures. In a moment, I'm going to show you a table, and you will see how much is it to trade micro Bitcoin or micro Ether. Okay, it's less than $100. Okay, it's very little. You will see in a table in a moment. You don't need to pay for the whole contract. Only come up with collateral money. Because you only come up with collateral money, now you are leveraged. So you benefit from that multiplying power. But of course, we gotta be very, very much in the discipline side, because both gains and losses are magnified, and therefore risk management is essential. So can I get a quick confirmation? I know this slide was probably, especially for the ones of you that are experienced, this slide was maybe a little bit on the boring side, if I may say it this way, but this is an extremely important concept. So I decided to spend a little bit of time here to elaborate and make sure every one of you understand the importance of what I discuss here, and also understand a little bit better how futures work, even though I have examples coming to clarify it. So question for everybody on the chat box with a quick yes or no. Does this make sense? Any question? Yes or no? Quick answer, speed of the light on the chat box. I really need to hear from you. This is a very, very important topic, and I would really appreciate your answers. So I'll be watching the chat box, okay? Very good. So now that we know a bit more about futures, and I'm still on the way, we need to talk about crypto futures, okay? Because in the old times, I gave you this story about the 70s and the 80s, and fast forward all the way to now, we trade on leverage, it's all electronic. But also, one of the things that was happening with futures for some time is the fact that futures were quite large as a contract. Thank you so much, Rachel. This is very nice of you. So these are they used to be quite large contracts, and therefore for professionals it's not a problem, but for retail investors or semi-professionals, or maybe professionals but they want to have more granularity and flexibility on how to scale in and scale out. So maybe futures contracts were too large. So then what happens is that since a few years now we got micro futures contracts, and those are fantastic contracts which are just exactly the same but of a smaller size. So they are still listed on the CME. The ticker symbols you will see me use in a moment is MBT for micro Bitcoin, or MET for micro Ether, which are two of the most important cryptocurrencies in the world by a lot. There are more that are relevant for sure. I mean, there are thousands of cryptocurrencies. The majority are, if I may be pragmatic with my words, a waste of time, the majority of them. But there are a few that are very relevant. And Bitcoin and Ether are by far the most popular ones, the most liquid ones, the more relevant ones, and we'll talk more about that as we go. So each of those contracts in the micro futures arena represent a fraction of a coin. They are designed to be cost effective. So now even retail investors, as long as you got very little money in your account, as I said, margin is the lowest it gets is around $100. I mean, I would certainly recommend you more capital than that to trade, but that's the margin requirement set by the CME. So you can start with very little. So let's take a look at those two contracts and their specifications. So first of all, we got MBT. Okay, so if I get into a chart and I type MBT, this is TradingView, by the way. I'm using TradingView, which is an open source platform. So I'm typing MBT, so I get micro Bitcoin. Okay, we can see Bitcoin is up by 3.21% today, 3.26% today as we speak. Okay, and if I type MET, and then I add one exclamation mark, which means that I'm looking at the front month micro ether futures, MET one exclamation mark CME exchange. So when I do that, I end up with this chart, which looks different. Micro ether is up 2.38% today as we speak. Okay. So those are the two contracts that we're talking about. Okay. Now, those are futures contracts. And because they're futures contracts, they have expiration dates. The expiration dates are March, June, September, and December. And in the futures markets, if you trade them, you know this. If you don't trade them, and don't ask me why, because it's to be honest, it's quite uncomfortable, but this is the way it is. We call expiration dates letters. HMUZ is March, June, September, December. That's what it means. Okay. So anyway, those contracts expire every 3 months. You could certainly roll over. Let's say you want to be in a trade for 2 years. So every 3 months you roll over. Kenanga can help you to do that. So you can stay in the trade as long as you want. But typically, as a futures trader, you are very likely going to be more active than 3 months. So you are in and out. Maybe you are in and out in 10 days, in 10 hours. Again, I'll give you examples of trades later on. And all of you, I would assume, you have different styles, meaning that some of you may be more active than others. Okay. Anyway, if we look at stocks for a moment, okay, so I'm just going to use any random Malaysian stock. So if we look at Tenaga, for example, and that's a stock, this is not futures. So Tenaga moves up and down in cents, right? So actually 2 cents at a time. 1420, 1422, 1424, 1426. This is how that stock moves. Okay, this is how that stock moves. Now with futures, it's different. If we look at MBT, micro Bitcoin, instead of cents, okay, instead of cents, we are talking about ticks. And notice how the ticks here go from 108,220 to 108,225, right, for the Bitcoin. So is 5, okay? 5 is the minimum increment here. And if we look at Ether, so we are looking at 0.5. So 56.0, 56.5. So it's not 1 cent or 2 cents, it's 5 cents. Okay, that would be for Ether. So when we are back on the table here, okay, so you can see, oh, by the way, I'm just noticing I got it backwards. That's a typo. I'm sorry about that. So 5 would be for the Bitcoin, 0.5 would be for the Ether. Okay. And every time you have that move up or down, because of the size of the futures contract, that creates a profit or a loss of 5 cents for Bitcoin or 50 cents for Ether. So this, if you don't trade futures, is probably a bit confusing at the moment, but don't worry. I have chart examples ready, and then we'll plan trades together, which will clarify it 100%. But I just wanted you to have this table on the slide deck. You know, you can also ask a copy of the slide deck to Kenanga, and they'll be happy to send it your way so you can have this documented. Again, I'll explain this with real examples in a moment, right? So this market is closed 1 hour a day, meaning that it's open 23 hours a day. So no matter if we're in Malaysia, or you are traveling and you are in China, or you are traveling and you are in Honolulu in Hawaii, or you are in the US or Europe, it doesn't matter. It's open 23 hours a day. So it's super convenient, no matter your style, okay? Apart from convenient, extremely liquid. So I talked about Ether and Bitcoin being very relevant. So you can see here the liquidity, how every year you can see growth of liquidity and open interest for the futures markets. So again, amazing markets to trade, which is why we're talking about these markets. We as traders, we always focus on liquidity, isn't it? Great. Fantastic. Thank you. So now, benefits of micro futures. Well, with lower capital requirement than standard futures contracts, now everybody can trade it. You can trade fractions of Bitcoin or fractions of Ethereum without having to own coins, meaning that you don't need to depend on the blockchain, which means you don't need public and private keys, which means you will not fall trap or prey of unregulated fraudulent companies like FTX or other companies you guys mentioned earlier. So this is just traded like you would trade any product in Bursa Malaysia just happens to be in the US under CME, which probably many of you already trade crude oil futures, gold futures, S&P futures, NASDAQ futures. All of those are amazing contracts also traded with the CME through Kenanga. Okay, so nothing new. It's just that instead of S&P or gold, it's Bitcoin and Ethereum. And instead of a full-size contract, it's crypto, so everybody can trade it. Now, because it's micro, so you can use it for learning, you can use it for testing, you can use it for position scaling. Maybe you like to enter positions little by little. You get into a trade with a small size. As it's moving your way, you add more. Or maybe you enter in a position with full size, and as it's moving your way, you release your position little by little. You scale out. So again, all of this has to do with trading styles. With large contracts, you may not be able to do it. With micro contracts, you're the boss. You decide how you want to get in, how you want to get out. Okay, so very, very convenient. More flexible, better suited for managing volatility in crypto markets. That was one of your fears. Some of you mentioned that. So what's one way to deal with volatility? Well, reduce the size. If you reduce the size, you reduce the risk. You may say, okay, I reduce the risk, but then I don't make enough money. Well, guess what? You do, because if the market is volatile, your targets are going to be far. So when you get to a far target, even though your size is less, your profit is decent. So that's the beauty of volatility. And that's the beauty of flexibility through position size that now allows you to tackle your concern when it comes to volatility. Of course, going to an extreme, you don't trade it. Okay, but the other extreme is a very large futures contract, which may be too much. Okay, so what's the sweet spot? Micro contracts, micro futures, micro crypto futures in this case. So supports tactical trades and portfolio rebalancing. And as a quick summary, so you have a smaller notional value, small contracts, flexible risk allocation, you play with the size, great for strategy testing. So before you commit more capital to a new asset that you may have or may not have traded yet, you can start small. Very safe, CME group, regulated. That's the most mature regulation that exists in the world. And I'm not joking, it's amazing. And tactical and educational use in the sense that you can even use it for testing new strategies or learning futures if you never traded futures before, and maybe the S&P is too big for you, so you can go with micro ether, which is super small. Super small, look at that. You only need $90. I said less than 100 is $90 for the micro ether, and it's $2,600 for the micro Bitcoin, which is larger, even though it's still very decently small compared to the big size Bitcoin futures, which is, I believe, is 50 times more. So in this case, it's 50 times less. Okay, so very, very convenient. Anyway, so I'm about to talk about a market outlook, short-term, mid-term, long-term. So we're going to look at the information I prepared from an AI angle to understand both Bitcoin and Ether when it comes to expecting what to expect into the short term next week, what to expect into the midterm next month or next quarter, what to expect into the long term next year. Okay, so this will hopefully help everyone. But also, I assume, based on your comments before, that while many of you are new, some of you are not, and I assume that some of you are very much into fundamentals and you love to understand the economy and some key indicators to decide on your trades and investments, both for stocks or commodities or futures or currencies or crypto. So I'll talk about fundamental when it comes to the market outlook. Some of you may be technical and you don't care at all about fundamentals. Well, no worries, I'll talk about technicals too. And some of you may be into quantitative finance and machine learning, which I am too, and I'll talk about that too. Okay, so I'm going to talk about all those different things, and I'm going to make it useful for everybody, no matter what you do or what you don't do yet. Okay, so hopefully this is going to be powerful for you guys, and I really, really want to welcome comments and questions as I go. So the question for you now is, you guys ready? Okay, let me know if you're ready. And as I even haven't started yet, and I first begin, just like earlier, I asked you about what are your concerns or reasons that crypto is appealing to you. So even before I start with the outlook, let me know if there is anything that is in your mind and you want me to double check. Maybe you are thinking, hey, Jose, do you think that Bitcoin will reach 160,000, you know. Maybe you have a number in mind or something. So if you have any question of that sort, feel free to phrase it. Again, this is not financial advice. It's a market outlook, and it's for educational purposes, and this is serious stuff. But at the same time, I'm happy to listen to how you think and try to accommodate what I'm about to present to you by using your own words. So hopefully it helps you more. Okay. Very good. So back to real-time charts. Okay, I'm going to do the market outlook by using real-time charts. And we are going to start with the Bitcoin. So first things first, I want to look at a little bit of technicals when looking at this daily time frame of the Bitcoin. And quick one on the chat box, everybody. Can you please confirm with a quick yes that you see my daily time frame of Bitcoin futures? Daily time frame of Bitcoin futures. So I'll take a sip of water. Please confirmation in the chat box. Quick yes. Wonderful. Thank you so much. Very appreciated. So we have a chart of micro Bitcoin, and here what I want to point out is the following. Okay, so we can see that a few months back, Bitcoin was in a downtrend. Okay, and when looking at the downtrend, I want you to focus, I want you to pay attention to those red figures here, where it was going down and we had a wave of 16% down with 150,000 contracts. Another wave down of 23% down with 170,000 contracts. Notice how we increased the size of the move, but also the amount of volume to the downside. And then the size of the move was less and the volume significantly less. And from there, look at turning point that took place and a downtrend became an uptrend. Okay. So what are we seeing now? Well, what we're seeing now is the following. Okay, what we're seeing now when it comes to Bitcoin is that the prior move to the upside was of 16% with 150,000 contracts, and the next leg was of 50%, which is more, with 289,000 contracts, which is more. So more size of a move and more volume behind it. By the way, if you trade Bitcoin CFDs, for example, or things like that, or you've seen those markets, you cannot measure volume. It doesn't exist because there is no exchange to measure volume, but this is CME. So we have this data, which is super useful. So on the chat box, when you see this information, does this make you bullish or bearish? I'd love to hear from you. And while I'm waiting to hear from you, if you see this and you feel it's bullish or bearish, let me know on the chat box. I'll take a look at Ether, and then I'll come back and I'll give you my view, apart from many angles, many other angles of observations I want to discuss, okay? But you guys let me know, okay? You guys let me know. Now, when it comes to Ether, let's take a look at what's happening with his Ether some time ago. Wait a moment, I need to confirm something here. Could you please confirm sound is good? I'm so sorry about that, but I think I clicked on a hardware mute button. I'm not sure about that. So if you could quickly confirm that sound is good. Sound is fine. Thanks for that. Great. I thought I clicked on the wrong button on my keyboard. I got a couple of hotkeys, and that can be dangerous.
I'm fine, Jose. Sounds fine.
Thank you so much. Thank you so much. So here's what was happening to Ether, right? A few months back. So we had a move of 36% with 116,000 contracts, followed by 38%, so more move, followed by 120, which is more, followed by 34%, which is less, but with more contracts, okay? So that was not as bullish at Bitcoin, even though then, of course, it went up, okay? It went up, but it was less bullish than Bitcoin at the time. And of course, because there is a huge set of correlation also, let's face it, we all know what happened in April, isn't it? We all know what happened in April 2nd, to be more precise, and then following with April 7th, to be even more precise, right? With Mr. Trump and the US administration. So of course, that's a huge change of market condition, and you know, what was a very clear downtrend, change aggressively. But it was more bearish with the Ether and it was more bullish with the Bitcoin, isn't it? Well, take a look at what's happening now in the present, where we can see a leg up with 242,000 contracts followed by 90,000 contracts. So you can see how Ether is weakening while Bitcoin, if I go back to the values, BTC or MBT, okay, you can see how Bitcoin went from 150 to 289, which is improving the volume to the upside. So in other words, Bitcoin is stronger, technically speaking, while Ethereum is, or Ether, I should say, because Ethereum is the network, is the blockchain, where Ether is the cryptocurrency on that network, and Ether is weaker. So from a technical angle, keep that in mind. Bitcoin is stronger, Ether is weaker. Okay, now let's talk predictions for next week. Let's talk fundamentals as well. So this is Bitcoin on a weekly time frame, and the information I'm going to pull in front of you here are the most important economical factors that impact Bitcoin to move down in the present time. Okay, in the present time means updated as of yesterday. Let me explain what do I mean by that. So I am running here two machine learning models. Okay, if you are into AI, you know what I'm talking about. If you're not into AI, let me explain that I am running a machine learning model to look for magnitudes. Okay, a machine learning model means that I feed data to that machine learning model, and it's I will tell you the specific technique I'm using here for the ones of you that are into tech. This is an XGBoost machine learning model, and that technology is allowing me to collect plenty of market data and make a prediction of how far up it may go, how far down it may go, and it may is how far up is likely going to go and how far down is likely going to go. So I'm using one model to predict magnitudes, and I'm using another deep learning model, not XGBoost. I'm using now another technology called deep learning. And this deep learning model is only trying to evaluate, is it going to end up or down in 1 week time, in 1 month, in 1 quarter, or in 1 year. So the below model, it's basically what's called a classification model. Is it going to go up or down? Where the model above, using XGBoost, is a magnitude model, which is trying to predict how far up is going to go or how far down is going to go during the time period, which could be 1 week, 1 month, 1 quarter, 1 year. So hopefully, I know I'm sharing a lot of information here. Hopefully, I'm not confusing anyone. Let me know if I go too fast, as I said earlier. Happy to repeat, happy to review everything. No worries, okay? I'm here for you guys. So going back to what I'm saying, those machine learning models have identified from a feature importance that what makes Bitcoin fall is durable goods, housing starts, and the housing price index. Now, this is super important because if you think about durable goods and housing starts and housing price index, if you are into fundamentals and you are into trading, you know those are absolutely key economic indicators, absolutely key to measure the health of an economy. In this case, the economy in the US. And notice that Bitcoin reacts very much to it, especially durable good orders, as you can see with those graphs. So in other words, it is fair to say that this proves that Bitcoin is part of the economy. So we are not talking about a cryptocurrency, which is like, one of those, I'm tempted to be informal. If you guys allow me, I'm assuming that we are all adults here in the conversation. So if you allow me to be non-formal for one word, this is typically known in the crypto space as shitcoins. And really sorry to pronounce that word, but that's how everybody calls it, right? So there are many of those coins that have no relevance. But as we can see with Bitcoin, it is indeed very relevant. It's actually part of the economy, as we can see. So for the one, and by the way, I'll show you a table at the end that summarizes all those economic indicators in case you want to take a screenshot. Okay. So anyway, what makes Bitcoin fall are those three guys. What makes Bitcoin rally on the weekly timeframes are also the housing prices and the building permits. So you can see that, you may even conclude that some people use Bitcoin to buy properties. Again, maybe I'm taking this too far. I don't have proof of that, but you can see how Bitcoin is part of the economy. Now, from a prediction point of view, this is what the model predicts. So the gray box is where we should see Bitcoin into next week. And that is, you may want to look at the box on the left. That is, Bitcoin should be up next week, reaching up to 4.41%. Okay, that's information out of yesterday. It's actually up already like 3%, so not doing too bad so far. And the down magnitude is 0.7. So we may see a little bit of a correction to the downside to end up for the week. This is what machine learning suggests is going to happen to Bitcoin into next week. Now, I'm going to accelerate a little bit more now that you know more about the machine learning models I'm using. But now, instead of a weekly time frame, I'm using a monthly time frame, 1M, 1 month. So what does affect Bitcoin in a monthly time horizon? Well, natural gas prices, non-ferrous metals, and non-farm productivity. So again, non-farm productivity, that's unemployment. Gas and metals, that's commodities. Many people call Bitcoin the digital gold, isn't it? So you can see here the importance, again, of this particular asset in the economy and why we are meeting today in this webinar. What makes Bitcoin tick up? The global price of metal index, CPI, which is inflation, is also a key element to driving prices up. Okay, so prediction into 1 month's time, AI says that Bitcoin will be down in 1 month's time, even though before going down, we may see swings as high as 16%. So we may revisit much higher price points before we end up down for the week. Okay, probably by a little bit only, but that's what machine learning suggests. Now, before I keep going with the quarter and the yearly, just to compare, now that it's fresh in our mind, let's look at Ethereum. Let's look at Ethereum and what to expect in a weekly basis for Ethereum, right? And I'll start with the prediction, okay? And the prediction for Ethereum would be to be up by 29%. So actually, more volatility is expected in the case of Ethereum, which is a little bit against what technical suggested, right? Because technical suggested Bitcoin is stronger. Okay, we'll see later into longer time frames if that's still going to be the case. But it does look like into next week, we may see a very strong push for Ethereum. At least that's what machine learning suggests. Okay. Now, before I look at the monthly prediction for Ethereum, I also want to understand a bit more of the fundamentals because Ether is a different animal. It's also a cryptocurrency, but notice how, for example, crude oil prices is part of what impact prices of Ether to the downside. The factors that impact Ether could be quite different. And at the end, I will explain why, and I will give you a table that you could screenshot if you like, that explains it well, especially if you're new to crypto, like many of you said, that will help you really to understand what is Bitcoin and what is Ether and which one should you trade, if any, given your preferences by understanding their characteristics. Now, building permits and copper is also something that impact Ether on the weekly time frame in a way similar to Bitcoin that was very much impacted by housing starts. And by the way, housing and copper has strong correlations because when you build buildings, you need tons of copper. So, in the short time frame, we see differences, but not that many. Which makes sense because those currencies are quite correlated. In the longer time frames, we may start seeing more differences. So non-farm payroll, the 10-year treasury yield, and the unit labor costs. So basically, interest rates, okay, interest rates and unemployment is what really has a say when it comes to bringing Ether down. Where when it comes to bringing Ether up, money supply, so how much money is moving around in the economy itself, personal income, how much money people have to spend, and the CPI, the inflation, which also has to do with how much money people have to spend, So you can tell that, you know, these two currencies are very much in tune with the real economy, maybe even more than the stock market. So it's really something very impressive to see. In the monthly time frame, okay, we are also seeing Ethereum down, okay, but again, greater level of volatility, end up down for the month, okay, but rallies up to 54%. So again, with futures is amazing. With futures, we can go long and we can go short. And if we assume, well, machine learning models are intelligent, they could be wrong too, right? So it's just data, and you know, the past doesn't necessarily need to be like the future, even though it's definitely a good tool for learning purposes. So if we assume that the prediction is going to be in line with what the future has for us, so we're going to get to see very strong rallies to the upside and very powerful crashes to the downside. And with futures, where going long and going short is just as easy. Okay, with the stock market in Malaysia, for example, you cannot go short. With a real Bitcoin on the chain, or the Ether on the chain, you cannot go short either. But with futures, you can go long and short. So I guess that we all see that the opportunity is clear, that there is potential for significant opportunities and profits in those markets. You know, again, always with risk management on the top of what we do. Okay. Anyway, what about in a quarter basis? Well, in a quarter basis, Ether shows that CPI and unemployment is very relevant. So you can see how this keeps repeating. And then to push Ethereum up, we need a stronger economy. So the oil needs to be better. The producer price index needs to be better. The GDP, the US trade balance, needs to be better. So in other words, Ether is very much in line with the real economy. I would think that even much more than other assets, which are traditional assets. It's very cool to observe. So what do we expect? We expect in one quarter Ethereum to be down, up to negative 35% down. So again, this market outlook, at least, you know, this is what machine learning says. And in my mind, I am active when trading those cryptos. I do not have a mentality of buy and hold it forever. I mean, some investor may get lucky, but it looks like to be lucky and end up with very significant profits to the upside sometime in the future, you should be ready to see your account under minus 35%. I mean, all of this is, of course, assuming those predictions will become reality, which, of course, they are intelligent predictions, but they're just predictions. Okay, so I want to make sure everybody takes this with caution. In a yearly basis, we see machine learning sees Ethereum down by up to 64% down. So Ethereum would go down to, let's say, 1,000, where currently the price of Ethereum is 3,000. So Ethereum may have to hit the 1,000 mark, which is around 60+% down. Okay, so this is what is being seen. So if you're into fundamentals and knowing that predictions suggest that later in the year, that currency will go down. So keep an eye on the GDP growth in China, on the CPI, on the crude oil prices, on the real indicators of the economy, because those could be leading indicators that reveal the economy is worsening, and therefore Ether may be going down. Okay. To the upside, Fed fund rates, building permits, and oil prices. So that's what the predictions suggest in a yearly basis for Ether. And then I need to complete my Bitcoin set of predictions for the quarter and the year. And so far, I didn't see any comment or question. Maybe you're waiting for the end. But again, I would really love if you guys could comment on the chat, because I'm about to conclude the outlook. I have more to show you, but the outlook is almost over. So if there is any question or comment, or even if everything is just good and fine, just type OK. It would be great for me to see a quick OK. And we can see here with Bitcoin, impacting Bitcoin to the upside, to the downside, on the quarter basis, CPI, oil export, and the price of the metals. Impacting Bitcoin to the upside, we have the Fed fund rate and the CPI, and therefore the prediction for Bitcoin, similar to the prediction for Ethereum, is to end up down. But notice how the magnitude to the downside is 14% instead of 20% over, 14% only. And if we look at the yearly prediction for the Bitcoin, so we are looking at minus 31% down instead of minus 65% down, which kind of confirms now our technicals when earlier we saw a stronger volume to the upside on Bitcoin and weakening volume with Ethereum to the upside. So that kinds of confirms. Okay, but now also you can have a measurement for magnitudes of expected moves beyond the directional prediction. Now, impacting Bitcoin to the downside in the yearly basis, we got the Fed fund rates, the unemployment rate, and impacting Bitcoin to the upside. I'm going to show you our summary table.
Jose, sorry.
Yes.
Okay, there is two questions. Sorry to stop you there. There's two questions from Rachel and also Iqbal.
Yes, very good.
For Rachel, she's asking why aren't the same indicators both driving upside and downside?
Yes, so you read my mind, Rachel. This is a great, fantastic question. I'm going to answer your question by showing you a table on the screen that explains the nature behind those cryptocurrencies, and really the reason why those currencies exist and the use of them is the reason why the economic indicators that impact them are different. So I'm going to show you that in a table in a moment, and both the nature of those currencies and then a summary of the indicators, and that will answer your question. And Iqbal says, how impactful has been the White House pro-crypto policy right now to the crypto market? Well, to the crypto market overall, Iqbal, I don't mean to be sarcastic with my comment, with the crypto market overall, I don't think it's been that good. But to making Mr. Trump himself and Mr. Elon Musk very rich, or richer than what they were already, including other people whose names have never been revealed, probably very well, okay, because crypto didn't go that far higher, right? So if you look at, for example, Bitcoin, okay, if you look at, Bitcoin, in beginning of the year is where is it right now, right? So it's not like Bitcoin went higher, right, since the beginning of the year, right, which is when Trump started. Having said that, look at the timing of events. Right? The timing of events have taken place when those gentlemen and ladies from the US have said or done things that are completely unexpected and crazy, but they were not unexpected for them. So again, I don't want to get political. It's definitely not my intention at all, okay? But definitely we are in front of a very unique situation. So my suggestion here is not to have any belief. It's more about managing the risk. And when your trading style, your trading methodologies suggest to buy, you just go long with good risk management in case you're wrong. And when your methodologies suggest to sell, you just go short with good risk management in case you're wrong. And if you're right, enjoy the moves because they are likely going to be 3 to 1, 4 to 1, whatever. But if you're wrong, make sure you manage your risk because there is craziness in this market, and that craziness also equals opportunity, but you do need that risk management component. Okay, so hopefully this makes sense. Now, going back to those tables, okay, and Rachel and everyone else who said that you are new to crypto. So first of all, what is Bitcoin? So it's often seen as the digital gold. So people buy it because they want to hedge against inflation. Now, when you compare this with Ethereum, it's a tech platform for smart contracts. So people set up smart rental agreements with Ethereum. People have digital books on the blockchain through Ethereum. You can do that with Bitcoin. So if you put a digital book on the blockchain and you pay for it with Ether, the use of the currency is transactional, whereas the use of Bitcoin is just in case, right? So totally different nature as a currency. You could even argue that Bitcoin is, I'm sorry, I may upset someone if I say what I'm about to say, but don't take me wrong. You may even say it's not even a currency. I mean, how often do you pay with Bitcoin when you use your touch and go, right? Never. Now, you probably don't use Ethereum with touch and go either, but you could much more often use Ether to do digital payments versus Bitcoin, okay? Or at least more often they happen, right? Because Ether is a transactional currency, whereas Bitcoin is also a currency, okay? Of course, it's a currency, but it's transformed into more of a digital gold type of asset. So it's traded or held as an asset, rarely used as everyday transactions, where Ether is traded or used in application and token creation, so you pay with it. you create products that use that technology. With Bitcoin, it's only value. That's it. So investor base for Bitcoin, institutional and retail investors, where with Ether, more retail heavy, also attracts builders and developers that create products, for example, digital books. Okay. Closely tied to interest rates. Okay. Inflation and liquidity cycles with the Bitcoin, more retail heavy, also attracts reacts more to user activity, innovation, and economic velocity. And with the volatility, Bitcoin has high volatility, but less and less and less and less. And to be honest, is no longer that volatile the way it used to be, and it still has a reputation. But to be honest, it's often quite quiet, okay, which was not the case years ago. Ethereum is more volatile, okay, now. Like you can see that clearly if I show you this chart, where that leg, this whole leg up on Bitcoin was 50%. The same leg up on Ethereum was 98% plus 20%. Same amount of time. So you can see how Ethereum is more volatile, even though most people would think Bitcoin is crazy volatile. Well, you know what? It's not that volatile any longer. I mean, it still made 50% return. But look, even the S&P, made like a very significant return in the last months, right? So yeah, not that impressive any longer. It's more of a, reputation that may not be that deserved any longer. Let me see. Adbal Rahman, how fast can the economic indicators that affect these currencies be replaced with other indicators? Well, in my studies, when I update my machine learning models, I see changes. This, of course, varies through time, but I see changes very seldomly. I mean, in the recent times, I saw some changes, and it has to do, of course, with great changes in economic indicators given the new Trump administration. So, in the last few months, I saw some changes, but before that, maybe it took 6 months or close to a year to see changes. So what you see on this table here is fairly stable, even though the market is a dynamic thing and, everything changes and things can change anytime, including unexpectedly, right? So we cannot just like take it as, old school economic theories, we cannot take it like that. We should be more dynamic than that, but I would say this table is quite stable, okay? So what changes Bitcoin, right? So on the left to the upside, on the right to the downside. So housing prices, personal spending, metal index, unemployment, CPI, the rates, the durable good orders, okay? And what makes Bitcoin fall? Also the housing market, gas prices, non-ferrous metals, oil exports. Anyway, I guess you are probably taking a screenshot if that is of your interest, and you've seen it earlier on my charts, right? With Ethereum, you can see how we have some of the same indicators on the table because, of course, they are extremely important in the economy, and these cryptocurrencies are part of the economy now. So, of course, some of the names repeat, but they are not in the same place. Okay, they are not in the same place. For example, here you have metals. Okay, and here you have China GDP, so quite different. Okay, so as a summary of a summary, okay, because I have more things I need to show you, so we need to conclude this outlook. As a summary of a summary, here's another table where basically when it comes to Bitcoin and when it comes to inflation, so lower inflation lifts Bitcoin, higher inflation adds pressure to the downside. With Ethereum is the same, but cooling helps modestly. With the interest rates, rate pauses boost Bitcoin, where threats of hiking the interest rates makes the Bitcoin fall, typically. Okay? Ethereum is more rate sensitive, and of course, because it's actually being used as a currency itself. So just like the dollar is more sensitive to rates, Ethereum too, and is more volatile, as we saw. When the Bitcoin was going up 50%, this currency, Ether, moved up 98% in the same time, right? Labor and wages. Strong jobs scarce Bitcoin, weak jobs calm Bitcoin. In the case of Ether, jobs plus the spending trends drive the volatility. consumer behavior, retail strength, draw buyers were weakness cools, and on the Ether side, the spending surge boost usage where drop stalls activity. And finally, from an industrial and trade point of view, so the PPI numbers and so on, commodity prices slightly more Bitcoin, and factory prices and borrowing costs affect Ether. So here we go. For the ones of you that didn't know about Bitcoin and Ether, you hopefully now understand better the nature of these currencies. For the ones of you that are into fundamentals, you now hopefully know a bit better which ones to watch and why. Hopefully you have taken screenshots, or you will ask a copy of these to Kenanga. I'm happy to receive questions later on as well. But let's go back to the slides and the live charts both, because I want to keep emphasizing a bit more on how Ethereum crypto futures, micro crypto futures work, and how Bitcoin micro crypto futures work. Okay, I'll take a sip of water and I'll keep going. Okay, so I said I had additional resources for you. So here's a QR code or a link that will bring you to my TradingView profile. So the TradingView profile looks like this. And in this profile, you are going to be able to see and read hundreds of articles about futures markets. Okay, so wheat futures, corn futures, oil futures, soybean futures, here we go, Bitcoin futures, FX futures, yen futures, gold futures, you name it, options on futures, all sorts of things. Many articles, 27 pages with articles here. So many, and all those articles are for educational purposes. So they are very, very educational and hopefully fun to read, fairly short as well. So hopefully this could really help you in developing your skills or understanding of new products, including micro Bitcoin and micro Ether. Okay, so please scan the QR code, go take a look, enjoy. And by the way, it'd be very nice of you that you click on boost or follow our page. That would make me very happy and give me a smile on the face, as he's doing already. But seriously now, enjoy these articles, read them. I strongly recommend you read them. By the way, if you follow the page, then you get alerts as we publish new articles, which we do in a weekly basis. So you keep yourself in tune with the markets. Anyway, so let's turn insight into action. Okay, so how can we apply everything we learn into trade examples? How can we take advantage of micro Bitcoin, micro Ether? How can we trade those markets? How do they work? Okay, especially for the ones of you that never traded futures before, the beginning of the session give you a futures one-on-one explanation that hopefully was a good introduction, but was probably a bit confusing until you see a bit more. So let me show you a bit more. This is a chart of micro Bitcoin futures. You can see the watermark here, MBT, micro Bitcoin futures. This is a 1 hour time frame. So I am now wearing the hat of an intraday trader. I want to trade micro Bitcoin in and out during the day. And what I'm doing here is first I'm looking at the trend. And I know that everybody here trades in a different manner. This is just one example. There are a million ways on how to trade. This is just one way, okay? And in this particular case, we can see how both MACD lines are above the dotted line, which is the zero line. And therefore, MACD traders would say, this is an uptrend. So because it's an uptrend, I want to buy micro Bitcoin. And for me to buy micro Bitcoin, I need to find a reason why to buy and a reason when to sell. So what I've done here is I am acting as a technical trader. I have identified prior turning points in the past. So that's potentially a technical support. Price is reacting to it and is giving me a little bit of a candlestick, indecision candlestick formation type of a doji candle. So if you are into technical analysis, you know what I'm talking about. Again, if you're not, bear with me. Again, there are many ways on how to trade, but let's pretend that's you. And then also you looked at this resistance. So we have support below price, resistance above price, and that sets my trade plan where I set my entry to be 105.25. So 105,250, sorry about that, which is above the current candle high. So in other words, if this market does this, I do nothing. But if it rallies above the prior candle high, which is 1 hour ago, then I buy. If it keeps going all the way to my target, congratulations, I sell at 107,580. And if it goes against me and it stops me out, I also sell for a loss at 104.42. So I got a plan for when I'm right. I got a plan for when I'm wrong. I'm all set. Now, if I'm right on this trade, I'm going to make money at a rate of 10 cents per point. If I'm wrong on this trade, I'm going to lose money at a rate of 10 cents per point. Okay, that's how you profit with the Bitcoin futures, the micro Bitcoin futures. So what happened in this trade is that it worked. Okay, so the next candle went up and it went all the way to the target. So congratulations. It could have failed. Just in case it did, my stop was right there. Okay, just in case it did, but it worked. So target reached. Congratulations. And now what happened? So let's observe this carefully because this will kind of be your futures course, crash course into futures. Okay. So this was a 5-hour trade. So this is intraday trading. It took 5 candles to get to my target. Each candle was 1 hour, as you can see on the watermark. So that is a 5-hour trade. How much price traveled? 2,330. Why is that? Well, because my entry was 105,250 and my target was 107,580. So the difference is 2,330. And because every point pays me 10 cents, so this trade made $233 in 5 hours. Question: how much would have let me rephrase that. How much would have I lost if Bitcoin did that and stopped me out? I would have lost $83. Why? Because my stop loss was 104,420. My entry was 105,250. The difference is 830 points, where I lose at a rate of 0.10 cents per point. That's $83. So in other words, I was risking 83 to make 233, which is almost 3 to 1, is a little bit under 3 to 1. To some of you, this is lovely. To some of you, you may think this is not good enough. There are different trading styles. I respect them all. This to me is definitely acceptable. And if you wanted to take this trade, let's say you're me and you're like, okay, that's fine. So then you just need to remember that you only need $2,600. That's the margin required to take this trade. So in other words, you made $233 by using $2,600. That is a return on margin of 8.96% in 5 hours. So you do this a few times a year and you're killing it. Of course, you also need to take into account that you will take losses from time to time. That's part of trading too. But obviously, this is powerful. That's what I meant to say when I said you're killing it. It's very, very powerful. Your risk is under control. You're in a liquid environment. It's regulated. You do it through Kenanga, and it's smooth. Okay, it's like trading any other asset that you probably know about and you are very comfortable doing, but now you're exposed to the crypto markets with all the benefits I mentioned before. Okay, and you just do it with the same brokerage account you have. Assuming you already have a brokerage account, it's the same account, and you're ready to go. Okay, so it's very, very simple. So this is how it works. Okay, now I would like to, before we conclude the day, time goes so fast, it's crazy. I would like to, at the speed of the light, come up with a real-time example, and then I'll take questions, if any, and we'll be done. Okay, so micro Bitcoin are regulated. You can trade any time horizon. Real-world methods support confident execution, and remember about discipline and risk management. It's absolutely key. Okay. This was, by the way, my last slide. Okay, so the last thing I would like to do is to plan on a real-time example so you kind of see how it's done. Okay, I'm going to do it here like this. I'm going to do it with micro Bitcoin, since it's probably the one that most traders look at. I'm going to pretend I am an intraday trader. So this is a 1 hour time frame of Bitcoin. And just to give you a different feel, I'm going to pretend that we are mean reversion traders. So I'm going to use a Bollinger Band. And you can see how price went outside the Bollinger Band, and now price is inside the Bollinger Band. You can see that. So just like it was outside, then it was inside, and it reverted back to the mean, blue line. It was outside, it was inside, and reverted back to the mean inside. It was outside, it was inside, reverted back to the mean. Outside, inside, reverted back to the mean. Outside, back to the mean. Outside, back to the mean. Didn't revert, so stop out. Outside, almost the mean, missed it. Outside, almost the mean, missed it. But now it's outside, so now I'm betting on reaching the blue line, right? So as you can see, sometimes it will, sometimes it will not. So risk management, trade management, trailing your stop, all those things. Happy to discuss all of that in a future webinar. Let's say this is the trade you want to take. And let's say you want to enter now as it's back inside the Bollinger Band. So what would you do? Well, you would be shorting micro Bitcoin, okay, at the current price, market, with a stop located above price, we'll decide where in a moment, with a profit being the blue line, which is 106,338. Okay, 106,338. So what if I make my stop to be located at 109 or something like that? If I make my stop located at 109, I'm going to make $179 and I'm risking 86. Okay, so that's a 2-to-1. So let's say this is not good enough for you. So maybe we'll do 108,750, 108,650, 108,700. Here we go, good enough. So that's now a 3-to-1. So I'm gonna enter Bitcoin now, which is 108.13. If it goes my way, I'll take profits at 106,338. If it goes against me, I'll be stopped out at 108,700. If I'm right, I'll make 179. If I'm wrong, I lose $57. Let's say this is for you. You just click the button and you're in the trade. Okay. Now, if it goes down, you start making money. If it goes up, you start losing money. Okay. This is how simple trading futures could be, should be, I should say. And because making it overcomplicated doesn't really bring in any value. So anyway, we are really hitting the ending time of the webinar, but I don't want to miss any questions. So please go ahead. If there is any question I missed, this is the time. And also, for sure, Imran, happy to be led by you if there is any question I have missed.
Oh, okay. Oh, we have two from Mr. Rahman and also Rachel. Okay, Mr. Rahman is asking, how fast can the economic indicators that affect these currencies be replaced with other indicators? And Rachel, she's asking, are they mainly impacted by US fundamentals? Have you noted any other countries' fundamentals impacting them both? I think this is referring to the previous subject you are talking about.
Yeah, understood. Very good question, both. Thank you so much to both of you, Adal Rahman as well as Rachel. This is great. So first of all, by the way, you can see how Bitcoin is going down. So we are making a little bit of profit here. So nothing that is magical, but for the ones of you that never seen shorting before, this is shorting, is making money on the way down. Okay, I just wanted to make this point, not about the amount of money we are making, but the fact that we are making money on the way down. Anyway, back to the question so we can conclude the webinar, everybody. So the economic indicators that don't vary too often, Abdul Rahman, I would look at changes in those indicators every few months. I update some of my machine learning models from time to time, just because nothing is static, nothing is forever in the markets. The financial markets are dynamic, but because Ether and Bitcoin are very much part of the economy now, it's a real thing happening. We can see all the economic indicators where housing, unemployment number, the Fed, the interest rates, the PPI, it's all real stuff from the economy. So you should not expect changes to happen too often. And next thing you know, housing was impacting the market, and now it's going to be the GDP of China, totally different indicator. So that is not the case, and that has been my observation. Okay, sorry about that. I just clicked on the wrong place. Yeah, and the question from Rachel, yes, they are mostly impacted by the US, and the reason why they're mostly impacted by the US is because the US is the most influential economy in the world. In other words, forget about Bitcoin and Ethereum. If you were to look at what impacts Bursa Malaysia, for example, I'm talking about stocks, even local stocks like Oriental Copy, which is a stock that trades in Bursa Malaysia, right? That had an IPO not too long ago. You may say, oh, it's not related. Well, you know what? There is a strong correlation with Bursa Malaysia, with the FKLI index, and the FKLI index is definitely correlated, has an impact, and is influenced by the US market because it's the largest market in the world. And therefore, anything that happens in the US economy impacts everything else. And therefore, the greatest source of impact from a fundamental point of view, it's indeed coming from the US. Even though the regulation over there is actually more restrictive for cryptocurrencies, their economy is the most impactful compared to others. So yes, it is. And very good question again, Rachel. And that would be the answer. And therefore, I believe we are probably done with the webinar. Even though if you have any last question, I'm happy to take it. But I'm in your hands, as I said. Amir. Sorry, Imran. Sorry about that.
No more questions. I think that's all questions for tonight. Is there anybody have any questions? Just on the side, that we are currently running a Mighty Futures campaign from the 21st to the 30th of June as well. So further information is available at the chat. Oh,
what
okay,
is the best time to trade?
Yeah.
This is the last question for the day. Very good question as well, FC.
What is the best time to trade? Yeah.
Yeah, these markets are open 23 hours a day and they are liquid all the time. So anytime is good, but if you want to catch the biggest swings, the biggest volatilities, typically they would coincide with the open of the Japanese markets. So that's quite early in the morning in Malaysia. Then the opening of the European markets, especially London, which basically this is our lunchtime, if you wish. And then the opening of the US market, which is going to be, after dinner time in Malaysia, right? So those are the three best times if you want to be very active intraday. If you are not active intraday, anytime is good because it's liquid all the time. And Imran, it would be great if you could answer Sean's question. This
calling
is great.
Once, calling twice, calling
yes,
twice.
Now we hear you now. Yes.
Yeah. Is there any more questions from anyone?
Very kind of you, Rui, for your message. It's been my real pleasure to be here, and I'm happy that you have enjoyed it.
Thank you very much, Jose, for the webinar as well, for a great session. So definitely a fruitful session for all of us. That's all we have for tonight.
Very good. Thank you so much, everyone, for coming, and a pleasure meeting you all. If it's our first time, double real pleasure. See you, everyone.
Thank you, Jose. Good night. Have a good day. Thank you.
Good night, everyone. Bye-bye.
Thank you. Bye.